Tackle today, Matt and Mark Justice bringing you all of the news, the charts, the key data points so that you can start your day informed. Got some news on Nvidia. We have Jolt's labor market data, and we have a market coming off a pretty vicious selling day yesterday, trying to find some footing. We had some negative economic data that we'll talk about here in a second. But Matt, a little bit of a bad news is good news vibe for the first time in a long time. I haven't seen a bad news data point get bought up. But technically, Matt, what are we looking at here in the major markets?
Yeah, and I do think technically that is the story that we are navigating after the volatility punch from yesterday due to Nvidia's report, and we'll get into that here in just 1 second. But from a technical perspective, you obviously saw a violation of the intraday level at 555 yesterday, and once that broke, volatility came right back up into the market as you saw that violation of the intraday support. And then what occurs when you violate support? We talked about this yesterday in Tackle today. We talked about it in detail in the Tackle Trading newsletter, talking about what are the technical scenarios this week as we update our community on navigating the technical landscape every single week in the newsletter. And we talked about the potential of the breakout of 565, and if it didn't break out, the path of least resistance was down. And if you violated 555, where were you going to go? You were going to go down to 550, where the next level of support is. And so that's exactly what transpired yesterday, despite all the volatility, and there was a tremendous amount of volatility. We violated support, and what occurred? It found the next level of support, and then you're looking at a little bit of a support bounce here, Mark, and you're talking a little bit of good news, or bad news is good news, because the market is a little bit up today on a slight negative report coming out of the Jolts. We'll talk about that here in a second, but I think we're just seeing a little bit of a reprieve bounce after yesterday's sell-off, and support typically does do that. And so it's going to be interesting to see what type of development we get after that fairly aggressive sell-off yesterday. And now we're sitting at a fairly important support level on both the daily chart in the S&P 500, and then obviously on the weekly chart, you're kissing up against that 9 EMA, which is right around that 550 level as well. A violation of 550, you really don't see support until you get down to about 540. So keep an eye on 550, very important support level. If you violate that, the most likely scenario is 540.
Yeah, and that 540 is where that 20 weekly is, which has acted as support before. I know bulls are like, screw 540. Let's trade sideways into the unemployment report on Friday here, establish some support, maybe some upward lift off, but certainly a true battle going on right now. True battle going on right now. Let's get to that economic data, Matt. And I'm also curious your take on Nvidia. But today, all right, first labor data point in a labor week. We have the monthly unemployment report on Friday. We get ADP and unemployment claims tomorrow. The first little data point was Jolts, and it came in weak on the weak side. Now, what Jolts does is it lets us know the amount of job openings out there. Well, there were expected to be just over 8 million job openings. Came in really light, one of the lowest numbers we've seen in years at 7.67 million. So a pretty sizable miss on what one could argue is the most important category of economic data, labor. So weak report. Now we have seen weak economic reports get sold, pretty viciously going back over a month now. This one did not trigger any selling programs. Well, it did for the first like 30 seconds on a dump, but that got bought up. That's an interesting little data point, Matt, that bad news getting bought up on a day. We haven't seen it. Now, this is just one time. Do you make anything more of it than just, okay, we've seen it once,
No,
put it in?
the only thing I think you can take out of it is it gives you a little bit of indication that the market is having are we going to get a 0.25? Are we going to get a 0.50? That is typically when you see the bad news is good news. It's when you're seeing the market beg for an additional rate cut is typically what you do see. And that's what you saw a little bit here today on the probability of that 0.25 versus 0.50 cut coming in September. The probability shifted a little bit here from just yesterday. It was 38% probability of a 50 basis point cut. Now, after the Jolts report, you have a 47% probability of a 50 basis point. And so there a little bit of bad news is good news today, but I certainly wouldn't suggest we're in a good news is bad news is good news environment as of yet.
Yeah, and then
I think honestly the technical side of the equation today is an overextended bounce is kind of my read on the
Yeah,
technicals.
that's not bad analysis at all. It'll be interesting if that starts to trend or if bad news becomes bad news really quickly. But one of those things that I just put in my head, to see if it confirms in future data. But it was noticeable to see that 50 basis point jump in odds. Matt, yesterday we had a pretty big sell off. Nvidia was down 10% at one point, and a lot of traders around the world were scratching their head. It's like, what is behind this ferocious sell off? And then we saw the Nvidia news come out just around the market close. Obviously, some that might have gotten leaked somewhere.
Well, and that's why I said what I did in the write up here. This move comes after Nvidia's stock dropped nearly 10%, kind of giving us an indication of exactly why Nvidia was selling aggressively. We were sitting in the traders lounge yesterday and obviously tackled today, and the market was selling off, and we knew Nvidia and semiconductors were leading the sell off all day long. They started the sell off, they led the sell off all day long. Very quickly in the day, we knew it was all about Nvidia, but we didn't know exactly why it was about Nvidia, quite frankly. Usually you have a very good understanding of what's creating the volatility in the market, but as of yesterday, there was a little bit of open question. Why is semi selling so aggressively? Why is Mag 7 selling so aggressively? Why is the market selling so aggressively on data that was just non-existent at the time? Well, it does come out later on yesterday that the Department of Justice is filing a subpoena in an antitrust investigation on Nvidia, and basically they're suggesting that there's some concern that Nvidia has a monopoly in the AI data center chip market, and I would suggest to the DOJ that they do. Nvidia absolutely does have a current monopoly because they created the first AI chip. They were first to market. They created a better product. They currently have the best product on the market. And so I find it extremely curious and slightly concerning that the DOJ is targeting Nvidia simply because they were first to market. That seems very aggressive this early in the AI saga, and it seems like they're targeting Nvidia to a certain extent. Mark, I do have a general philosophy that governments around the world will target the Mag 7 companies for fines and aggressive fines and so on and so forth. And I kind of see that here as well. I find it very difficult to see this catching more legs, seeing
materializing into
further down
something
the road.
significant. Yes. Okay.
It's something that is concerning. There's no doubt about it. But we've seen the EU target almost every single Mag 7 company out there. And the logic, and we've seen the US government now target a few of the Mag 7 components out there from an antitrust perspective as well. But this one on Nvidia seems very curious given the fact that I'm not sure you can blame Nvidia for AMD not being a stiff competitor yet. I'm not sure you can blame Nvidia for ARM not being a stiff competitor yet. Those that competition's coming. It's coming, and the DOJ is just really aggressive and really early in that conversation, in my opinion. I'm not sure it's going to go as far as the DOJ expects it to go here, but again, whenever there's a little bit of smoke, sometimes there's some fire there. So it is obviously concerning, but at least we know what caused the volatility at this point.
Yeah, no, it's and it's one of those, and algos get a news story and there's no support levels. They're gonna have fun with that day, right? But does it materialize in anything? I think your analysis is spot on.
Well, especially when most people in the market did not have an understanding of what was creating the volatility. Now we do. We can get into the analysis. Okay, is this concerning? Is it not? Is there something here? Is it not? And there's obviously some concern there, and we got to let that play out. But it's I'm not as concerned as I was yesterday, for example, when we were just seeing the volatility, but we didn't have an understanding of what was causing it. Now we do. Now let's see what happens from a technical perspective in the semiconductors.
Yeah, no, and we're going to highlight the chart of the day in our written portion, showing that 200 fact. Let's go, will you go look at the SMH 200-day moving average? Because this is something on the Traders Lounge in the coming weeks that we're going to track, right? You had your rally, you came back. This is a logical place for a support zone to develop. How on a scale of 1 to 10, how high is this on your radar right now?
Oh, I think it's a space that you have to track right now. So however you want to answer that, 8, 9, 10, it's the semiconductors, and the semiconductors are around the 200-day moving average, which does not occur very frequently. The last couple times we've gotten a 200-day moving average test on the semiconductors, you got a violent test here from a volatility perspective in the 200 held. You got a simple test over here against the 200-day last October, end of October, and that was the beginning point of perhaps the best trend we've had in the marketplace over the course of the last couple of years. And so it's certainly concerning with the volatility right now, and it's very difficult to get a proper technical read in the semiconductors right now. But over the next couple of weeks, if you start to see pattern development around that 200-day moving average, absolutely you're going to want to take a look at the semiconductors at the 200-day moving average, in my opinion.
Now, a couple other earnings reports, Dick's Sporting Goods and ZS. How'd the numbers look?
Yeah, on Dick's Sporting Goods and on ZS, kind of a bad day to report earnings, I would say, after the volatility from yesterday. Dick's Sporting Goods had a pretty good report. They came in with a beat against expectation on EPS. They also beat on the revenue side of the equation, and they also raised forward-looking guidance on the EPS while they reaffirmed guidance on the revenue side. And I would say that is a really good report out of Dick's Sporting Goods. On ZS, not exactly a good report. They certainly did outperform the EPS expectation by 17%. That's a good beat on EPS. Revenue rose 30% year over year, beating the forecast by about 30 million. But they did officially lower Q1 EPS guidance. And whenever you lower Q1 guidance, that's just going to kind of take all the attention in an earnings report. EPS, revenue, guidance, those are the three things you're always looking for in an earnings analysis. And it goes the priority order: guidance, EPS, then revenue. Guidance by far is the most important. EPS is the second most important. And then revenue is a distant third when it comes to the performance of an earnings report. Now, when you are looking at Dick's Sporting Goods, for example, Dick's was coming from the high point, obviously hadn't got caught up in a lot of the volatility. It really held up really, really good. It did not hold up today. Following that report here on Dick's, a little bit of a gap down, but no sell down behavior, treating it like a bullish retracement that the candle suggests. A little bit of a hammer candle following that gap down, looks to be a little bit of a support build. But to me, Dick's had a really good report. High bar expectation because of where you were at technically on the chart. A little bit of a gap down is understandable given the fact that we're going through some volatility concern in the marketplace, but a positive report nonetheless out of Dick's Sporting Goods.
They have been a well-run company for years. Like they just do a great job. Just the management, hats off to them.
One of the better retail management companies, no doubt. On ZS here, ZS is obviously a high growth type stock with a lot of volatility here today, down 15% on the day. Little bit of a gap down, not necessarily a massive gap down into a massively important support level. And so when you're looking at their earnings report coming out of ZS here today, we had CrowdStrike last week, Palo Alto the week before. Now you got ZS. And when you're looking at all of those stocks from ZS, Palo Alto, and CrowdStrike, there is some concern in the cybersecurity side of the equation. ZS came out with a beat on EPS, like we talked about. They beat on revenue. But when you drop forward-looking guidance, you're telling the traders and the investors that we got some uncertainty for the future. We don't know if we're going to be able to, handle that based on what we thought we were going to do. We're going to update that guidance to reflect our concern about the environment. Well, the price has to reflect that as well. gap down pretty aggressively, but it gapped down into a very important support level. Let's see what happens here at that support level. But from a technical perspective, that's not a good look from a technical perspective. It's a pretty nasty gap on a pretty bad guidance report out of ZS.
Let's go over talk global markets. Let's go to the dollar. This is a chart map, maybe the chart you and I are honing in on the most because of its ramifications in gold and silver. Matt, that's a good look for gold and silver. We got a lot of economic data the next 48 hours, not a lot in the weeks to follow. You confirmed down here, Matt, that's going to be a real good technical signal for, and as you said on the Traders Lounge, maybe a silver add immediately, but certainly beneficial to gold as well.
Yeah, nice little pivot point on the dollar here, as it does look as it confirms against that 9 EMA on the downside, confirms against the low price from yesterday as well. We'll see if it can close underneath the 9 EMA there. But when you talk about good news is bad news and bad news is good news, the dollar's going to tell the truth of that story, and the dollar's running specifically on economic data here. On beats, it's getting a bid. On misses, it's getting a sell. And so you had a miss on the JOLTS report here today, seeing a little bit of downward pressure on the dollar here. That's going to improve the conditions of the market. That's going to improve the conditions of the commodity landscape itself. Now, in terms of that secondary follow through, just one quick point on the dollar here today. Where the volatility stopped was right in line with where the old pivot point of support is. Keep an eye on that, because anything follow through against that will be a really good environment when you're looking at the commodities. And so you're getting what you want to see in the dollar, and it's behaving exactly how we expected it to behave from a technical perspective. Now, when you are looking at those commodities such as silver, such as gold, such as copper, you are seeing a little bit of a support build right around the 28 level on silver. That is a really good support level. There is no doubt about that. That's the support level in the left shoulder against the head and shoulders formation that you are tracking currently in silver. And so anything on the silver side, you're front running here, and you got to understand that you don't have a high probability edge. You have a good return versus risk ratio in my estimation. And so it's not a pure technical read here, Chucky. The technical read is actually on the dollar itself, but you are sitting at support on silver right around that 28 level. So keep an eye on that 28 level. On copper here, you're going to need to see a little bit more development, quite frankly, on copper versus silver in my estimation, given the fact that you got a lot of moving averages that are a little bit more concerning in my estimation on copper than you do on silver. On the gold side of the equation, I'm always impressed with gold, and I'm impressed yet again with gold here today. But gold hasn't really got caught up in the volatility in any capacity. It's really just kind of stuck in mud between 2,500 right now and 2,550, or excuse me, 2,560, 65. That's kind of the top end of that resistance level. But it really impressed that it hasn't got caught up in any of the volatility.
Yeah, no, and we're going to continue these conversations on the Traders Lounge in depth. Come join us. Come be part of this amazing pro community. Sign up for a 15-day free trial. Go to tackletrading.com, sign up for that trail, and see what it's all about.